Stop looking at US tech stocks. Seriously. While you were watching Nvidia and Apple, something massive happened in Asia. Taiwan's stock market just hit 40,000 points, up from 8,000 10 years ago. Taxi drivers and food stall owners are trading stocks like day traders. The counterintuitive truth? The biggest AI boom is not in Silicon Valley, it's in Taipei. But that's just one of 5 stories you need to know. Apple's new CEO is walking into a China nightmare. The US just accused China of industrial-scale AI theft. Memory chip shortages will last for years, and China just killed a $2 billion deal, sending a chilling effect across every cross-border tech transaction. Let me break down all 5, and stay until the end for the 3 secrets that connect everything happening in Asia tech right now. I'll admit something. For years, I focused almost entirely on US tech. Apple, Nvidia, Microsoft, Google. I was missing half the story. Asia is where the AI hardware is made. It's where the supply chains live. It's where the geopolitical tensions are hottest. Today, I'm going to show you 5 Asia tech trends that will shape 2026 and beyond. We're going to look at Taiwan's insane stock rally, Apple's new CEO walking into a China minefield, the US-China IP theft war, the Meta Menus deal chilling effect, and the memory chip shortage that won't end. By the end, you will understand why Asia matters more than ever. Stay with me. Let's start with the most stunning number in global finance. Taiwan's stock market just hit 40,000 points. 10 years ago, it was 8,000. That is a 400% increase. The context: Taiwan is now the 6th largest stock market in the world, ahead of Germany, ahead of Canada, ahead of South Korea. Why the boom? AI stocks. Taiwan's semiconductor manufacturing company, TSMC, dominates the index. But it's not just TSMC. The AI frenzy has turned stock trading into a national pastime. The stories you won't read in US media: taxi drivers checking stock prices between fares, food stall owners trading on their phones during lunch rush, grandparents teaching grandchildren how to read candlestick charts. The counterintuitive truth? Taiwan is not a developing market anymore. It is a global tech powerhouse, and the AI boom has made every citizen a participant. But here is the risk. When taxi drivers give stock tips, bubbles form. Watch the valuations carefully. Now let's talk about Apple's new CEO problem. John Ternus takes over from Tim Cook in September. His biggest challenge? China. The facts. China is Apple's largest Asian market and its biggest manufacturing hub. But everything is going wrong at once. The memory chip shortage. Prices are rising. Supply is constrained. Phison CEO says shortages will last several years. Apple's gross margins are already under pressure. No clear AI strategy. While Google and Samsung launch AI-powered phones, Apple is behind. The iPhone 17 has AI features, but nothing that blows competitors away. Geopolitical nightmare: Iran war, US-China tensions, supply chain shifts to India, which has its own problems. The counterintuitive truth? Tim Cook's greatest skill was managing China. He spent decades building relationships with Chinese officials, suppliers, and customers. John Ternus is a product genius. But is he a diplomat? The market is betting yes. But the risk is real. Now let me show you the accusation that could reignite the trade war. What the White House is saying is that China is engaged in, quote, industrial-scale distillation of American AI models. So what does that mean? Well, Chinese companies are taking large US AI models, like OpenAI's GPT-4, Anthropic's Claude, or Google's Gemini, and they're distilling them into smaller, faster, cheaper models. The most famous example here is DeepSeek. DeepSeek's model was built using these distillation techniques that US officials say constitute intellectual property theft. And China's response? They call it, quote, pure slander. The timing is interesting too. This accusation came just before the Trump-Xi meeting. Right now, tensions are at an all-time high. The counterintuitive truth? Whether the accusation is true or not, the damage is already done. Trust is broken. More restrictions are coming. Chinese companies are now racing to build models that don't rely on US technology, and the US is racing to prevent it. This is not a one-time fight. This is a permanent state of competition. Now let me talk about the chilling effect that every tech executive is worried about. The Meta Menus deal. China ordered Meta to unwind its $2 billion acquisition of Chinese AI startup Manus. The founders were summoned to Beijing. They cannot leave the country. The chilling effect. Analysts say technology transfer is now the focus of Chinese regulators. Even if a startup moves to Singapore, even if they restructure as a non-Chinese entity, China can still block the deal. The message to entrepreneurs. You cannot bypass Chinese rules by changing your mailing address. The message to US tech companies. Every acquisition of a company with Chinese roots is now at risk. Due diligence now includes, will China let us do this? The counterintuitive truth? The chilling effect is worse than the actual block. Because honestly, uncertainty is worse than a clear no. Every deal now has a China risk premium. And that premium could kill transactions that would have been fine otherwise. Now let me end with the trend that affects everyone. The memory chip shortage will last for years. Phison CEO KS Pua said it directly. Several years. Why? Two reasons, both related to AI. Demand side. Both the US and China are building massive AI infrastructure. Every data center needs storage, not just compute, storage. AI inference requires data retrieval. That means memory chips, lots of them. Supply side. AI inference services are moving to the cloud. That creates more demand, not less. Unlike previous chip cycles, there is no oversupply risk in sight. The counterintuitive truth? Most chip shortages end when supply catches up. This one might not. Because AI demand is not cyclical. It is secular, and both superpowers are in an arms race to build the most AI infrastructure. Who wins? The companies that make memory chips, Micron, SK Hynix, Samsung, and the companies that make controllers, like Phison. Let me leave you with the 3 secrets that connect all 5 trends. Secret number 1. The Taipei versus Silicon Valley blind spot. Most investors allocate 90% of their tech portfolio to US stocks, but the hardware that powers AI is made in Asia. The supply chains are in Asia. The geopolitical risks are in Asia. If you are not watching Taiwan, Korea, and Japan, you are missing half the story. Secret number 2. The chilling effect multiplier. One blocked deal, Meta Menus, has changed the calculus for every cross-border tech transaction. The fear of a block is worse than the block itself. Uncertainty kills deals. And right now, uncertainty is at an all-time high. Secret number 3. The secular shortage opportunity. Most shortages end. This one might not. Because AI demand is not a fad. It is a structural shift. Long-term memory chip shortages mean long-term pricing power for suppliers. The companies that solve the shortage will be the winners of the next decade. Here is my question for you. Which of these 5 trends do you think will have the biggest impact on your portfolio? Drop your answer in the comments. I read every single one. Like and subscribe if you want more analysis on Asia tech and global markets. I'll see you in the next video.